As realtors, we keep hearing people say they are waiting for prices to come down before they make a move. In this month's market update video, let's talk about the cost of waiting. I am your Aunt Julie with this month's market update. In the last 10 years, appreciation of home values in the Phoenix market based on annual appreciation has ranged between 4.2% a year and 25.6% this year alone. The median sales price for single-family homes has increased over 28% in the last 12 months. One of the factors that causes prices to go up and down is the disparity between supply and demand. When the demand for a product exceeds the supply of that product, prices go up. Remember the Beanie Baby craze in the early 1990s? The Thai company released limited supplies of certain cute furry animals, or would announce the retirement of a popular Beanie Baby model, and people went insane, turning a $5 collection of felt and thread into a very expensive collector's item. Population growth in the valley, low interest rates, rising rental prices, the growth of the short-term rental market, and corporate investors investing in residential real estate, partnered with the shortage of new home construction over the last decade, has created a rising demand for homes in the Phoenix area that far exceeds the supply. As long as demand exceeds supply, prices will continue to rise. And unless a major outside influence, like a global pandemic or an unforeseen alien attack, causes dramatic shifts to the economy, the housing market shows no sign of offering lower prices to buyers. Prices drop when supply exceeds demand for an extended period of time. In 2006, when the market went into freefall, it took 6 months of supply exceeding demand before prices began to drop. We don't see this change coming anytime soon in this market. Demand is driven by growth in population, strong growth in jobs and income, favorable lending practices, and consumer sentiment. There is nothing on the horizon indicating a negative shift in demand for homes in the valley. Supply is driven by outbound relocation, job losses, new home construction, and a shift of market inventory. Though new home permits are up, they are not sufficiently high to bridge the huge lack of homes, and it takes labor, time, and materials to build a home, two of which are currently in short supply. And with investor-owned rentals getting great cash flow with skyrocketing rental prices, we're seeing fewer of these properties come back into circulation. We don't see any relief from our supply shortage coming anytime soon. If you're waiting for prices to drop, you may be waiting for a very long time. Plus, as interest rates have started to climb, the cost of borrowing goes up. At a 3% interest rate, it costs $4.21 per month for every $1,000 borrowed. That would make the principal and interest payment on a $400,000 loan $1,684. At 4%, the monthly loan payment jumps to $1,908 a month, a 13% increase, or nearly $2,700 a year more in mortgage interest payments alone, which for many people is no longer tax deductible. That money can go a long way towards a nice family vacation. The cost of buying will most likely go up. So if you're thinking of making a move, if your family is growing out of your current house, or you're rambling around in too much space because the kids have moved out, or you're just ready for something new, it is a great time to cash out your current equity and invest it into a new property. Yes, you'll make more if you wait to sell, but it will also cost you more to buy. And with all signs pointing to rising interest rates, if you have to finance, it is likely to cost you more as well. If you're unsure what steps to take in this market, you're lucky to have a trusted advisor in the business, and that's me. Give me a call. I am Julie Goldammer, your favorite no-nonsense aunt with the Desert Fairways collection of DF Real Estate.